Hello and welcome to the latest energy market update. It's been a bearish week for energy prices, so let's have a look at what's been happening in some more detail. After the bank holiday weekend, oil prices opened higher than Friday's close. However, a late fall in prices thanks to a strengthening US dollar led to front-month Brent closing down $1.34 per barrel. As the dollar continued to strengthen and reached a near 3-week high, prices continued to fall. The weekly EIA report showed an increase in commercial stocks of 2.3 million barrels, and this was greater than expected. And as a result, front-month Brent closed just over $1.5 per barrel lower day on day. Prices continued to fall throughout Thursday's session, losing $1.2 per barrel at its close, to settle at $45.9 per barrel, and this was down just over $4 per barrel compared to last Friday. Oil gas contracts fell on Tuesday. The prompt was directed lower by a heavily oversupplied system, whilst longer dated contracts took their direction from a strong pound relative to the euro, as well as the late fall in oil. Most contracts lost between 0.4 and 0.65 pence per therm on session. The system remained oversupplied throughout Wednesday. Imports into the UK increased, and although exports through the interconnector were close to maximum capacity, this didn't really affect the overall healthy supply outlook. Softening oil prices also contributed to the downward pressure provided to prices, and most contracts closed the day around 0.5 pence per therm lower. Prices fell once again on Thursday as the system was in surplus. LNG withdrawals from South Hook increased significantly in order to clear capacity ahead of the anticipated arrival of 2 further tankers, which are due to berth on the 3rd and the 9th of September. A bearish prompt and weak oil prices pressured curve contracts lower, and Winter 17 lost 0.5 pence per therm day on day. Last night, all contracts closed lower than last Friday, closing between 1 pence per therm and 1.6 pence per therm lower. Electricity prices tracked their gas counterparts lower on Tuesday, as CCGT accounted for nearly 58% of the generation mix. Renewable generation was low, and wind provided only 3% of the mix. Rising coal prices, however, did limit the losses seen on the curve. All contracts continued to post losses on Wednesday. The weakness of gas and oil pressured prices lower throughout the day, and seasonal contracts closed the day between 0.3 and 0.5 pound per megawatt hour lower. Prices then continued to track gas lower on Thursday, and last night all contracts closed lower than last Friday. October 16 closed at £39.05 per megawatt hour, down £1.15 per megawatt hour. You can download the full version of this report from the Energy Price Information tab on our website. Thanks for watching, and we'll see you next week.